Well, good morning, traders. This is Blake, and you are listening to the Face Show. And Dale is out; his internet is down. It sucks when when you get up in the morning and you have no internet or no excuse me, no power. He has no power. No, I guess that would include the internet as well. So, we woke up after the Super Bowl. No, actually, before the Super Bowl, markets opened up with some gaps in the market. We saw the euro dollar, just gapping down. We filled that gap immediately, and I keep thinking to myself, these moves that we see in the market are becoming, or let's just put it this way, the market seems like it's becoming a little bit more numb to President Trump and the tariff threats, and it seems like the market is just shrugging everything off. And I'm gonna ask Ryan. I'm gonna bring him in since he's been up since for hours now. Him and Kman have been around. I was listening to the Flow Show a little bit earlier. I mean, do you get a sense, Ryan, that the market just doesn't really care anymore, or the market just doesn't believe Trump is ever going to do anything at this point, or anything bad that's really going to disrupt the market or the economies?
No, I don't think so. I think because it's heard about this 25% tariff on this, that, and the other, for months. When it actually happens, the market's like, well, we knew it was happening, so there's nothing for it to panic about. It's what we don't know that's the problem. We're still not really getting into the trade side of things. So we don't know what he's going to do about the deficits with Europe or anyone else and things like that. So that's still the unknown, but the rest of it, it's all coming in bits and pieces. And so you see these moves in currencies when these headlines pop up, because everyone scrabbles around. Well, who's it going to hit? Is it going to hit Australia? Is it going to hit Europe? Is it going to hit this? Is it going to hit that? And then you either get a general move, or then it fades out to more specific to countries. I mean, look at you've been mentioning dollar mex. Despite them getting a month's grace and seemingly wanting to get a deal, dollar mex is still right up there and not pulling back too far. It's not dipping below 20 or heading to 19. So
Yeah,
while
it's a
the
much
market
different
is,
story than if you look at the
yeah,
Canadian, right?
yeah, but even a Canadian, it's been stuck in this range still for the last, since December. Even with all the tariff moves and everything, it's stuck in that range. It can't break down. It can't sustain a break up. So it needs something more for the market to then push on. If it gets another 25% on steel, fine, we get a move in the loonie, but it still doesn't break the range. So you can't get complacent. I mean, we've got this stuff now swirling about gold, and whether Besant's going to monetize the balance sheet through revaluing gold, because apparently they value it at $42 in the national accounts, which is trading 2,900 at the moment. So there's lots of stuff still floating around. You can't just switch off and say, "Oh, market hasn't moved, so we can forget about all that stuff again."
Yeah, I mean but to me, like the threat of the Trump threat, if you will, it seems like it just seems like to me that the market is not taking him seriously, which scares me because it scares me that he's going to be like, well, I'll show you. I'm gonna let me put, because there's actually, if you read through, if you just like read through some of the articles in Bloomberg and stuff, and you start just reading about everybody's dismissal of what Trump's doing, and it's like everybody says, oh, it's his bark is way worse than his bite. I mean, if people are saying that about you and he gets a sense that people are not taking him seriously, is there a risk that he's just going to you know go get aggressive to make sure and make an example out of some country at some point?
Not to fight the market. He'll make that threat and do that action to get that country to come to the table and get a deal done. That's, I think the market's coming around to the fact more than his bark's worse than his bite, that the reason he's doing this is to get a better deal for America. And it's going fine, carry on. You go threaten Europe. And the problem comes if Europe goes, fuck you, Mr. Trump, we're going to hit you with double the tariffs, and then you get into a massive trade war with everyone.
Yeah.
Then the market will start moving. But he's pulled up Mexico and Canada. They've both bent the knee. He pulled up Panama. They bent the knee. He's had a meeting with Japan. Japan looks like they're going to swerve tariffs, and they bought $1 billion or $1 trillion worth of arms off of him, and going to buy LNG, and they're going to invest in US steel. So they're going to get off the hook. So he's getting the deals done, and I think that's what the market's seeing. He's saying, the bark is bad, but the end game is to get a deal done, and if that happens, that's good for everyone.
All right. Well, I don't know and well, you can tell it's obviously the stock market doesn't think that this is going to be anything that's going to disrupt what's happening in the equity markets. I'm really excited to have Katie Stockton. I know Dale brought her in today specifically, to talk equities. I'm gonna obviously be conducting the interview today since Dale's power is out. But it's going to be interesting to get her take because I see a lot of people trying to pick the top in the equity markets, and the equity markets just don't want to. All we're doing is just a bullish consolidation near the highs. Now, before I bring in Kman, I see that Steve is here. Steve, I want to get your input really quick and maybe your opinions on how you're feeling about, what's happening with the whole Trump situation and his stance and how the market's taking it all in.
Stance on what subject, mate, specifically?
On tariffs, like what we were just talking about.
I think
the market.
I think we have a lot of room ahead before we can, understand what's going to be happening and what exactly his intentions are. Right? We've heard a lot of rumors. We've seen in advance a very strict stance, and but I don't know. I'm very, very, very skeptical. Right? I mean, if he plays his cards right, he can get something out of it without really making any sacrifices. Because, as I've explained multiple times before, tariffs is bad news for America, first of all, right? If he wants to do something positive for the US, what he has to do is he has to start rebuilding the proper environment for infrastructure to be built again in the US, so the US can, become again an industrial power, right? And then no tariffs are going to be needed. Americans will be more than happy to be buying American products again. But let's be honest, there is an absence of US products in many, many industries. So as long as that's the case, no matter how many tariffs you put in place, people have no alternative but to be buying foreign products.
So okay, this is true. And so what's that going to do to the overall economy then?
It's going to definitely decrease the disposable income for people, right? Because they're going to have to be paying more for what they were buying up until this moment in time. And it's definitely going to have some inflationary effects as well. That's what's going to be happening.
So, a lot of buying from pre Trump election and before he came into office, there was a lot of buying from corporates, business standpoint. Maybe a lot of consumers kind of front loaded some goods. Do you think that that's going to eventually weigh, like the lag effect, if you will, is going to weigh a little bit on the overall economy in the next few months because of all this front loading, buying stuff ahead of all these tariffs that were coming into play?
Yes, it is likely. Although I think that, you know, there's going to be a lot more waiting before, first of all, as I've explained before, fortunately or unfortunately in this case, people cannot be stocking up on the vast majority of products, right? Because they're of no use after some time passes. So I think that for the time being, there's not going to be some long-lasting effects from the threats of tariffs and upcoming tariffs if those don't come into effect. But I do think that in general, uncertainty in the markets is always a bad thing, right? As long as everybody's in wait and see mode on what's going to be happening, that's not going to do any favors to the US economy, that's for sure.
Yeah. All right. Well, hey, I'm gonna bring in Kman really quick because I want to talk a little bit about yen because
Morning.
hey, good morning. Good morning, Kay. The dollar yen is just hovering around this major 152 level. I mean, we made a big stink out of it last week. We got here. We've been kind of on both sides of it, but we're trading pretty heavy right now. What's your sense of the dollar yen and how you want to trade it at this point?
Yeah, I think so. There was this double-edged sword, right, between Japan getting away without being tariffed too much. Also, let's not forget that Bank of Japan is on its way to hike interest rates, and according to their own sayings, they will probably hike a little earlier than what the market was expecting. And then on the other side, you have Shiba promising big investments in the US, and that, of course, there are hedges and to be done against anything we like to do when we invest in a foreign country. Again, but that would, in theory, mean somewhere some dollar buying, right? But I think now the market is really a bit trapped in between those two ideas. I'm going to say. I also, I actually don't know what to really think of it right here and now, because it could go either way. If it jumps back onto the risk side of it all, yen may actually stay relatively offered at levels that we have seen end of last week here around 150, 151 probably in the dollar yen. But yeah, I think the overarching theme right now is still pretty much leaning towards it's going to be relatively good for Japan. And we can also not forget, obviously, that Japanese yields are gradually rising, so they will attract attention from the Japanese whales, who may then get out of a few foreign bonds and get back into JGBs, and that would de facto be a supportive factor for the yen. So on balance, I would say dollar yen will find rally sellers for now.
Okay, and I'm sitting here patiently waiting that we're going to see a move back above 153 to sell into, but
Yeah,
I'm wondering if we're even going to get that at this stage in the game.
yeah,
I'm
that's
hoping that we get above there. I know you pay attention to the especially with the dollar yen, the Ichimoku clouds, and we're well below cloud support right now, which comes in previous cloud support, which would be current
exactly there.
resistance. Yeah, so around the
Exactly there. I mean,
153.50.
150.5, that's roughly the magic number right now above here, right? That's going to be one that the market is going to scrutinize if ever we get back up there.
Yeah, I was gonna say, dude. I mean, can we even make it above the 200 DMA now? It's that's what I'm starting to wonder at this
Yeah,
point.
yeah.
So, hey, go
It's
ahead.
it's 150 pips from where we are. Look at the amplitude of the move that we had this morning. It's over 100 pips already. So I mean, 150 pips dollar yen is something that could be done and could be seen. But yes, your first zone of resistance now is coming in around 2.5, anywhere between 2.5 and 280. Are we going to get above? I don't know. It's sufficient that one of the BOJ members said, yeah, well, or that we get the wage negotiations going a little less optimistic than what they were last year, we could be there in a flash, you know, in dollar yen.
Yeah, all right. Well, hey, I want to go back. Forex Trader asked, can you talk about the gold monetization story that Ryan you had mentioned a little bit earlier? Do you want to elaborate more on what Besant is discussing here? Because I mean, gold obviously, I have a hard time arguing the downside in gold, and when I am in that position where I can't even argue a bearish case about something. I get a little nervous because gold right now looks like we're going to channel resistance of 2950, which is the 161% extension. I mean, technically that looks like where we're going. But can you talk a little bit or elaborate a little bit more on what this Besant monetization story
Not
is?
not too much because it's all pie in the sky stuff at the moment. It's all possibilities and sources and may happen and whatever. As I said, the long story short, well, we started last night, I think, with um, Trump saying that Musk's Doge department has found something fraudulent in treasuries, and now they're talking about how they're going to maybe mess around with debt and the deficit and everything to try and fix the finances. And I don't know if people are putting two and two together and coming out with five, but they're talking about monetization, which may involve gold. Which, as I said, as far as some of the stories I've read, you guys over in the US, you value for all your accounts purposes, the government accounts purposes, you value gold at 42. I think it's $42 an ounce, which is obviously way below where it is. So if they revalue at current gold rates, you basically lose a ton of your debt because it's all being valued in reverse, if you know what I mean. But I don't know the ins and outs of it. It's all flaky stuff at the moment until we get more clarity.
Yeah, I saw some headline or something about it that he said that some of our treasury debt might not be valid or something to that
Yeah,
effect.
something like that.
I was in the middle of obviously the Super Bowl, and I mean, but gold's just been ripping on fire. So I don't know. I mean, Kman, did you have any thoughts about what you were
Still,
reading regarding that?
no, but if you slap tariffs on China and the Chinese want to open, how much is it? Billions to for Chinese investors to buy more gold. That's where your moving gold is. It comes from. The thing is about monetizing, and we're seeing all kinds of stupid levels being thrown into the arena on gold or where it could go. But yeah, I mean, if you revaluate your gold, let's say only at the average rate of the past 3 or 4 years, not even putting it at 2,900, although Trump wouldn't like anything more for it to go to 3,500 and then revalue the whole thing and come up with a much lower debt than there was before. But yeah, if you just market to market, that's going to have a mechanic effect on your debt, of course. But I don't know how much the gold reserves are in the US, by the way. But no, I think the main reason is still that you have people don't really know yet what source they are going to be eaten with, and in doubt, it's always been my case, right? I've been talking about that for over a year now. I mean, it's in doubt, you buy gold, you as a hedge, and as a hedge about potential bad things to come if the trade war intensified. People can say it's an inflation hedge, but I just call it a hedge against everything bad in the world. If your economies are going to suffer, you might as well be in some hard instrument, you know.
Well, we happen to have somebody that has been bullish on gold since I've known him for the last like 9 years. Steve, do you have any opinion about this whole situation we're discussing right now?
Sorry, mate. I was reading an article. I wasn't listening.
Oh, that's okay. That's okay. Don't worry about it. Don't worry about it. Well, the bottom line is gold does look extremely bullish here. It looks like we're, like I
Technically
said, we're gonna.
speaking, gold has done nothing wrong, right?
Right. We were just talking about the gold monetization story that that has been circling around with Trump and Besant, and just wondering if you had an opinion there. It's fine. So let me ask real quick. I'm going to go back to Ryan, and I want to talk a little bit about this week. This week we have CPI, and CPI is obviously everybody's thinking about talking about inflation. We saw the University of Michigan numbers on Friday. They were full percent higher than expectations from the last reading. How important is CPI going to be to the market this week, in your opinion? And what are you going to be looking for here?
CPI is going to be important as long as there's no big Trump headlines floating around at the same time.
Right.
I think definitely the way I'm looking at the moment is that the market set its sights on June, July for the next Fed cut. It's now reduced cuts from 2 down to 1 after the NFP data. It's going to take an awful lot for the market to get more or get less dovish than it is already. So I think with the CPI data, I think the bigger price risk right now is that we get soft numbers from CPI and any other data, and then we start seeing a big dovish repricing. Because I don't think we're really going to start pricing hikes or anything like that properly. But so I think if you get a soft number at the CPI and it's expected unchanged in the headline 2.9% and to come down a pip, I think to 3.1% in the core. If it's softer than that, I think there's a risk you see a bigger dovish reprice going on than you would a hawkish reprice if we get hotter numbers.
Okay. And I'm in the camp that the dollar's trying to carve out a major high here. I mean, the big reversal from last week. I'm sorry, I'm on a weekly chart and it's looking a little messy here, but the big long candle, the lower high, I think the dollar is it's aching to go lower. And I know it's bounced today, obviously through the weekend tariff news, but I think that you're already starting to see sellers step in, despite the gap higher that we saw in the dollar. Do you have any sense and feeling on how you are going to be trading the dollar in the days ahead?
Yeah, I trade it with the data. I think dollar yen is prime rally selling at the moment. So many upside you see in that. That's a pair that I'll be looking at certainly. Like you said, we're turning around this 152, but that was a big old break from that 153, 70, 80 area. And I think if we get up there and it looks like holding, we've been coming down all year. Japanese data is going the right way. Wages, inflation, services, you name it, it's all going the right way for Japan. So I think, as I say, it's harder to see upside dollar on, less inflation starts busting massively higher. It's harder to see the dollar rallying on good data. It didn't really rally on the NFP, and that was good numbers.
Yeah. Well, hey, real quick, I just want to talk to you about this, Brian, since I know you trade sterling quite a bit, you trade the euro quite a bit. It's hard to be bullish the Eurozone economy. It's hard to be bullish the UK economy, but do you think the dollar is going to underperform against these particular currencies? I mean, you look at them price action wise. The euro is having a real difficult time going down. So is the sterling. They've been relatively buoyant, but is that more of a function of the dollar, or is it a function of like maybe their economies are turning a little bit here?
Well, we've not seen any real turning yet, but there is a divergence now. You look at euro, dollar, and cable; they didn't make fresh trend lows. You look at Aussie dollar and Kiwi; they did make fresh trend lows last week. Still struggling to bounce above key levels. That 62, 70, 80 area that I've got. Can't get above there. It's still looking very dead cat. Made that low last week. But if you look at, take cable, it couldn't get down towards the lows again. So if the dollar is going to weaken in your scenario, then obviously all currencies versus the dollar are going to rally. But there's more, I think we see bigger reaction in euro and cable than perhaps we see in Aussie dollar and Kiwi and the like. So yeah, it stopped going down. We're still in the trend. We're not breaking a trend. But if we start breaking a trend, then I think you could be off to the races.
All right. Kman, how do you feel overall about the dollar index or the dollar just in general and some of these other, currencies around here?
Well, I started selectively to sell it last week. I've got a little bit of not a basket, but yeah, I think cable is finding support. Aussie Kiwi, I'm quite happy that they showed up the levels at the open of the week. So that's something that we can trade off in the short term, because in the more medium term, we still have to. I mean, medium meaning more than just a session, right? We still have to wait for what those tariffs are going to be giving us. Yeah, in the longer term, I think it's not going to be beneficial for the US, but we still need to remain relatively flexible right here and now. But yeah, there's a few candidates. If it's all not going to be too bad, that may stand up versus the dollar at some stage. But yeah, I'm on the other hand, I'm also long gold. It's not really a dollar play, but it's more like a hedge against whatever can hit this market even further.
So what are you as far as this week goes, like I said, we got CPI, we got producer prices, we got Powell, we have the Humphrey Hawkins
Yeah,
testimony.
yeah,
Is there anything specific you're going to be looking
yeah.
for this week?
Well, you know what? Speakers, because tomorrow, well, during your night, but tomorrow morning we have Catherine Mann of the Bank of England speaking, and she surprised everybody by voting for a 50 bps cut last week. So the market is probably going to be a bit cautious on sterling to see until then to see what she has to say. We also have data out of UK land, GDP coming up, and then we have Trump now. Most of the time, when it comes on the back, well, not too long after that the Fed meeting, and there's going to be a lot of repeats, but depends on what he's going to be grilled. It's going to be does he need to answer to, oh, what if inflation rises? What are you going to do with the interest rates? I'm probably thinking that he's going to walk the fine line again, but it's going to be scrutinized, and usually we do have a bit of a move coming out of it. Inflation in the US, is it important, the one that we have now or the one that we are expecting for later? And I'm personally going to say to this month's inflation is going to be an algo blip, and then the real ones we are waiting for later on.
Just an algo blip. Just an
Yeah.
algo blip. All right. I'm looking around for Katie Stockton, and I don't see her just yet. But in the meantime, Steve, any last minute thoughts about this week? Any markets that you think everybody should be focused on aside from gold? What are your thoughts here?
Equity markets have been consolidating, the same we've seen happen with the dollar the last few days. And in my opinion, there is a good chance that this week we're going to, see some resumption after this pause. That's what I think.
All right. All right. Well, I was just going to say this bullish consolidation, that's what it seems like to me anyway. But that's how you're seeing it as
that's
well.
how it looks like for the time being. Technically speaking, it indeed looks like a bullish consolidation. Very true.
Well, there is no one better to bring in to talk about, the technicals of the market than Katie Stockton. So I'm happy to bring her in today. But before I do this, I just want to mention, hey guys, it's going to be a very busy week in the market. Obviously, it's kind of toned down right now, but this week's going to get crazy, especially with CPI, PPI, Powell speaking, Trump tariffs. Best place to be is in the Forex Analytix community. We have a really, really, really very active community. So it's $1 for 10 days. Try it out. Download the mobile app. Come join us in the chat rooms, and we'll see you there. And in the meantime, I'm going to bring in Katie Stockton, and I want to thank Ryan, Kman, and Steve for all being here today. Thank you guys so much, and we'll see you guys. We'll see you guys a little later.
Bye-bye, mate.
Cheers, guys.
Bye, guys. And good morning, Miss Stockton. How are you?
Good morning. I'm doing well. Happy Monday.
Happy Monday. And guess what? You get me today because in Dale's area, apparently they're dealing with power outages. So
no.
see, he is, that's one of the benefits of living in California is
I guess so.
get to deal with that from time to time. But great to Happy New Year. And it's been forever since I've actually talked to you.
I know, too long.
It's been way too long. So, we were just having this conversation about the equity markets are just, it just seems like we're a bullish consolidation. Doesn't seem like, the market cares a whole lot about what's happening with the tariffs. I obviously I want to get your views, just on how you're seeing the market because and we can go into this and with your charts, but you're seeing the Mag 7, starting to weaken a little bit, certain pockets of weakness, but it seems like the market just is rotating and finding strength elsewhere. And a lot of old school people, myself included, we believe that you start taking out the generals, it's only a matter of time before the market suffers, but it doesn't seem like that's the case as of yet. So how are you seeing the market overall, Katie? And I'll stop sharing and let you share some of your charts here.
Yeah, I don't disagree really on any of those points. I think that we've seen some real underlying rotation for sure, and that's helped keep a floor under the market in a way. But there's been some real deterioration in the indicators to suggest that we still are at risk of a deeper corrective phase. So that's in part what we've been focused on. We believe that the secular sort of bull trend is still very much intact, and yet we think that this is going to be more of like a consolidation year for the S&P 500 and NASDAQ 100. So this is the monthly chart. I know this is a bit long term, but I think it's important context to have in that we expect that this, which has been a really substantial cyclical up move, of course, largely driven by those mega caps, has given way to a DeMark signal. So you see the 13s there. Those are counter trend indications to suggest that perhaps the next 9 months or so will be a bit more of a churn at best. You see a corresponding downtick in the monthly MACD histogram to corroborate that, where we would have like a more decisive sell signal would be either if those DeMark signals are confirmed or you have a stochastic downturn. So those are things that we're watching out for, but we have enough deterioration on the shorter time frames, as you can imagine, to suggest that we're kind of on our way towards that. So if we look at the weekly kind of zoomed in here, you see still the moving averages showed the cyclical uptrend, right? But within that context, there's been a meaningful loss of intermediate term momentum. Arguably, the weekly MACD really shows no signs of recovering, despite the fact that the S&P has been really pretty elevated close to its highs. Pretty remarkable to see that behind the scenes in that way. And as you mentioned, Blake, the Mag 7, they've seen a pretty distinct loss of momentum and relative strength, and that's obviously been part of the drag here. And if this is a Bloomberg index for the Mag 7, and you can see a brand new weekly MACD sell signal there as well. So we've already been in a consolidation mode with an active DeMark sell signal, but this tells us that it's probably the start of something, not the end of something in terms of that sort of consolidation working off an overbought extreme. That tells us we probably need a bit more corrective action there. And this is what's happened with the relative performance now below the 50-day versus the S&P 500, supporting a deeper correction. And, finally we saw kind of Alphabet and maybe to a lesser degree soon we'll see it from Meta. They've joined that sort of underperformance. And I think that it's a potential drag, but then even the bottom up work isn't showing a lot of great charts, right? So even if we're going down to the small and mid cap level, even if we're going, individual stocks of the S&P 500, we're not seeing a lot of great, like sort of bullish technical catalysts. And I think that's a real message, right? In that if we don't have any action items, I think we're generally better on the sidelines.
What's carrying this market higher, Katie? And by the way, I don't know if I've ever told you this. I know you're a big DeMark follower. When I first moved back home to Scottsdale, Arizona, this is about 12 years ago. Stupidly I rented an office from a hedge fund out here, and I used to get up at 2 a.m. to get to the office by 3 to start. To do my broadcast, but it was in the same office complex as DeMark's
Oh, no way.
company. Yeah. So the daughter who runs the company, she's in her 50s. She's about my age. And we used to chat all the time. But yeah, so
I would imagine they start early too. I've never seen a work ethic like Tom DeMark's, frankly.
Yeah, they do. They're Phoenix office, so they start at the 0 dark 30 hours. But anyway, that's neither here nor there. But what's carrying this market? What's really taking the baton, if you will?
Yeah, so the RRG that you see here, it gives you a little bit of a clue where it's coming from on the sector front. It's still like up until very recently was these mega cap heavy sectors, right? They've had the best trajectories here.
Yeah.
But you can see that how deeply oversold. This is kind of like where you've seen the underperformance down here, and you're getting upticks. Healthcare is the most pronounced here. So the rotations are starting to favor the more defensive and cyclical areas of the market, and that's to the detriment of the former market leadership. So that's more the sector story there. And honestly, the breadth. So we almost like have to make a distinction between breadth and leadership, right? I think it's often confused. So if we were to look at breadth, it's not been too terrible. And breadth means participation, right? So like how many stocks are up on up days, that type of thing. And until that really shows meaningful deterioration, we're still going to have like a decent tape, right? The leadership has definitively shifted, right? So think of leadership more as like the relative performance of those mega caps for one, and also stocks at new highs. So you've really seen that loss of leadership, but you really haven't gotten that meaningful loss of breadth. Our indicators would suggest we are going to get it though. This is the cumulative advanced decline line. So you can see breadth, again, it's fallen off a bit, but not too dramatically. But if you look at the impact on the indicators longer term, it is pretty meaningful to suggest that just like the major indices themselves, we probably have a bit of a corrective phase in breadth underway, right? So we're looking for this breadth metric to continue to trend lower. And with that, you're going to lose more and more support for the market. So breadth has been all right. It's been the leadership that's been a little bit of a hint. And you highlight the tariffs. I mean, now that's kind of known news, right? I thought the DeepSeek reaction was really kind of interesting because it reminded us that what hits the market is often what's unknown, right? It's probably not the tariffs that's going to be the catalyst, right, for the next down leg. It could be something that we just don't know about yet. But regardless, I think the market could even just kind of fall of its own weight in a way here based on the indicators.
So, fall on its own weight. Is there any particular names that you're looking at that are just like, here's a couple of standouts that really are just not looking great. Is there anything out there that has your eye in that respect?
Yeah, I would say, certainly the likes of Microsoft or an NVIDIA. I think,
Yeah, right.
yeah, I mean, to take the obvious ones, I guess. I mean, Microsoft, like if we didn't know or care about what this stock was, I mean, this would look pretty toppy, I think, to most of us, right? This is almost like a head and shoulders-y feel to it. indicators all point lower. Our cloud model, to me, is in jeopardy of breaking. Look at how it thins out here, but not to mention how it's gone from an uptrending cloud to more of a flat cloud. So we're seeing that really broadly where the cloud has flattened out and you're having these reactions to long-term overbought readings. And NVIDIA would be included in that we have here too, it just really looks toppy. So you have a DeMark sell on the monthly, an overbought downturn, and a declining MACD histogram there to suggest that at least this cyclical up move has given way to something a bit different, right? So we know that that's the case. Where we're like more interested and more excited are the relatively oversold areas of the market. So not to focus too much on the negative because there is always opportunity somewhere. We are more interested in the healthcare relief rally as something that folks can maybe leverage. We highlighted Regeneron here as a short-term long idea. And look at, I mean, you can contrast that, of course, to any of the mega caps. See a
Sure.
cyclical down move with a 13 buy signal, so DeMark buy and an outside up week. So this is almost, it's kind of counterintuitive, but we're a little bit more interested in these counter trend types of setups in this environment because the relatively oversold names are less likely to get hit by, a C wave in this corrective phase.
So, I would be remiss. We've already had a question about it, so I do need to bug you a little bit about gold because gold has just been on fire. What do you think about gold here? And I mean, I can't argue a reason. I was just telling everybody, just a little earlier during our show, I can't argue I don't have a bearish argument for gold, and it scares the heck out of me when
I know.
when I'm that way, but. How do you see gold right now?
Well, it's been the right way to be, right? We almost feel the same way. We're doubting ourselves, but frankly, the trend is still quite strong, and
Sure.
the monthly chart looks still very good. So it's not like it has that same characteristic as equities where it has DeMark issues. This is the monthly gold chart. You can see the difference here. There you go. Look at the MACD, just looks better. Stochastics pointing up,
Yeah.
no DeMark sell. And so the last breakout, I'm trying to find my report here, got us to about 30.60 on a measured move. So we highlight gold every week in our this weekly note, Fairlead Tactics here. And you can see the measured move price projection. Let me zoom in a little bit on this. So you see this breakout, and the measured move just is assuming the trajectory of the trend will maintain itself.
Yeah.
And so we think that's very viable, especially with the new MACD buy signal on the weekly chart. And at the same time, we think silver might actually outperform, which is kind of screwy. But I always think of silver as almost that high beta version of gold, in the same way like you could look at Ether versus Bitcoin that way. And so we look for, or we're looking for silver to outperform based on the ratio. I just sent a tweet around on that.
Okay. Well, you think silver, and let me make sure I heard that correctly. You think silver is going to start to outperform gold from here on out?
Yeah, and
Okay.
I'm not saying necessarily longer term. It's almost a big trading range for the two. But
Yeah.
within that range, it looks like we'll see a pullback that favors silver. It's not to say gold won't still be forging higher, but silver is maybe the higher beta choice that has a little bit more near-term upside. So I think that would be interesting. And we actually highlighted Bitcoin in our morning note or our forthcoming morning note. And it does, I still think of Bitcoin as a great sort of risk appetite metric. So a day like today, as an example, we have Bitcoin up 2.7% right now. I always think that probably means the equity market won't get too bad today. It
Yeah.
doesn't mean anything necessarily for tomorrow, but you can really sense the risk appetite in Bitcoin. So I think for even those that could care less about it as a trade or investment, to have it as a risk metric is kind of helpful.
And I was
Yeah.
going to ask you about Bitcoin anyway, just because it's like, to me, it's like the equity markets. It's consolidating near its highs. It does. I don't see any reason to be really on the short side of Bitcoin, other
No.
than, if you feel that stocks are going to roll over, then maybe you do short it as a risk proxy. But do you have it on any sell DeMark, 13, DeMark indicators there?
Yeah, so Bitcoin looks better, healthier, longer term than the S&P 500. Notice here too, here's the monthly. There's again no sell signals to highlight. So it is
Yeah.
differentiated positively longer term. But shorter term, it does seem to have some risk. I think these weekly stochastics are so helpful. You can see a negative divergence there, just a lower high, higher high. So that usually would give way to more corrective action. We're not recommending shorting Bitcoin. I think that's always dicey. But we have the first MACD sell signal. This is what I highlighted in the morning note. Since back here. So we have this new MACD sell. This one gave way to a really prolonged corrective phase. So we feel we could be in store for a bit more of the same. Bitcoin has that propensity to stair step higher. So we're assuming this is just the stair, ultimately from which Bitcoin will lift. But I think it might take some time.
So, maybe best case scenario is we get to see 75 or 80,000 again, before and maybe some sort of corrective phase like we got last year, if you will.
Yeah, and that 75 level, this is right in here is like 74,000.
Yeah.
That's a great former resistance area that would make sense as support. It's not to say we have indications it's going there, but that's for sure a strong support level. In between here and there, there's a couple other things that we could focus on. The cloud is already sort of invalidated here. So we've already reversed the cloud. And then you can see these previous lows kick in here.
Well, Katie, I always appreciate your technical views, and one of the things that I love about what you do is you have a fund that is really, kind of focused more on technicals and taking advantage of the market from that point of view. Can you tell us about what you guys and gals do at Fairlead, and then also about your fund that you have?
For sure. So we are, I guess, officially like an independent research provider and now also a fund manager of the TAC ETF, TACK. And so that came as sort of a byproduct of our client base and their demand and their sort of interest in sector rotation strategies. So what we're doing with the TAC ETF is essentially investing in the sector spiders, so it's a fund of funds. And we're doing so in an equal weight manner. So we're trying to reward the sectors that are smaller than technology with an oversized position, knowing that when technology is the primary source of upside leadership, that our client base is really interested in investing in stocks, individual stocks, cloud computing stocks, AI stocks, et cetera. So we figure TAC is sort of the great core equity holding. But we also are very risk averse, I'd say, both in our approach to technical analysis and also portfolio management. So we have an element to TAC where we're using asset allocation. We're rotating into short-term treasuries, long-term treasuries, and gold when we feel that the market's warranting it, right? So right now we have about a 1/8 position in those risk-off categories. And that helps us, balance out the risk when we have these kind of environments that seem a little bit more tenuous. So that's been great. The performance is really very solid and with very favorable risk metrics. Very low drawdown relative to the S&P 500, low correlation, low beta. So we're pretty proud of the fund, and we publish all sorts of research. As you know, Blake, we have about 9 research reports that we're publishing per week. So we're pretty prolific, and I'd say we generally focus mostly intermediate term. Our fund is long term in its orientation, but we'll focus mostly on that kind of like the next quarter or so in our research. And it's a great way to understand, I'd say, what the technical dynamics are, behind the markets in a consistent way. I always believe, we are best served by approaching markets somewhat systematically, to try to take out some of the emotion. And, the charts really help you do that and get there faster in terms of that type of approach.
Well, Katie, you know, I'm a big Katie Stockton fan, so thank you so much for spending your time this morning with us here on the Face Show. And if you guys and gals, you know, enjoyed listening to Katie and you're listening to us on YouTube, make sure you give her a big thumbs up. Katie,
Thank you,
I
Blake.
want to wish you a great 2025, but I do want to catch up with you before at some point throughout the year. I'm just it was a nice surprise, even though Dale's out, that I got to spend some time with you today. So I
Yeah,
do want to
same
say
here,
thank you.
Blake.
Yeah, yeah, it's really, really great. So, thank you so much, and I hope you have a wonderful day. And everybody else, have a great one. And Katie, we'll talk to you in the very near future.
Sounds good. Take care.
Thank you so much. All right, guys and gals, have a great day. Good luck, and you know, make sure you guys are tuned in this whole week. It's going to be a busy week. We'll have Dale Pinkert back with us. So you guys all have a great one. I will talk to you soon. And Jay, thanks for reaching out. Find me on forexanalytix.com. You can go through support and you can contact me through there. Thank you very much, everybody. Have a great one. Bye-bye.